Hi everyone, welcome to today's morning report on Tuesday the 2nd of June with me, Rich Perry, market analyst at Handtech Markets. European trading session has been accelerating lower actually. Started off fairly flat and then just in the last few minutes really started to decline on the equity markets. Both FTSE and DAX down 0.8% as we speak. Sentiment has been fairly mixed actually. The talks over Greece continue. The leaders of the creditor nation or creditor organisations are meeting today to try and come to some sort of way that they can get an agreement with Greece at the moment, and obviously the markets are increasingly cautious on the back of that. No real sign of any deal, although interestingly enough Pierre Moscovici, the French finance minister, has given a suggestion that there is progress, and that has helped to drive German bond yields higher. Interestingly enough, let me just show you the German 10-year pushed strongly higher today, and that has helped to support the euro, and also could be one of the reasons why also that equity markets are quite sharply down as we speak. But at the moment, as we speak, there's no real sign of a deal that you can really speak of. However, what you do have also is over the last few hours we've had the Reserve Bank of Australia giving its monetary policy, standing pat interestingly on monetary policy. Quite widely expected that, but no real sign of any further easing on the cards for the RBA. And that has driven the Aussie quite strongly higher actually against the dollar, over 1% higher on the Aussie dollar today. And there is a broad correction that we're seeing on the dollar today. Nothing too significant yet, but you would certainly say that the dollar is now sort of settling between these two Fibonacci levels, interestingly enough. So that is something that we need to certainly keep an eye on. The sort of intraday correction in the US dollar is still driving these markets, but general air of dollar strength still remains. So we now need to look towards what data we've got out today, and it's the Eurozone. Sorry, my fault. There you go. Eurozone CPI or HICP. Sorry, which is out at 10 o'clock, the flash data. We had the German data yesterday, actually came in just slightly higher than expected, so that was that should now drive potential for even a beat of expectations, but certainly it would appear that the expectation of a 0.2% increase in inflation, interestingly enough, seeing as we've been in deflation territory for the past 4 months, we haven't had inflation for 5 months actually, so it'll be interesting to see if the Eurozone moves back into inflation today, and that would probably give the euro a bit of support, and that data is coming out in a minute or so, and we'll see how that affects the euro. But certainly at the moment the euro is positive today and taking its lead off German bund yields. But I think ultimately this is likely to be another rally that proves to be a chance to sell for the euro. But I'll talk about that in my euro charts in a minute. Other than that, we've got the factory orders for the States this afternoon. Forecast to come in actually flat, which is a little bit of a disappointment considering the positive month we had last month. But factory orders continue to disappoint really, and that is a source of concern potentially for the US economy going forward. So factory orders remaining fairly depressed actually in the US. That takes me on to my chart of the day, which is the Aussie dollar. And this move on the Aussie dollar that we've seen actually has broken this downtrend that we've been in for 2.5, coming up towards 3 weeks in the Aussie. And that sharp move to the upside is beginning to turn around some of these technicals. There's a lot that still needs to be done that would before you'd start getting near-term bullish. But certainly you're no longer near-term, you're no longer sort of playing this bear trend. Momentum indicators beginning to turn higher. You've got the stochastics sort of bottoming out. No real sign yet of that starting to improve, but you'd say that if you got a positive day tomorrow, then the stochastics are likely to start pushing higher. and the RSI has ticked higher as well. But the interesting facts come on the hourly chart now. Just zooming out here, you can see this downtrend channel that we've been in for the Aussie, and certainly that has now been broken. And you've also now seen the Aussie break out to a 3-day high, which is actually comes above all this resistance around 76.70 area, broken out, and also 76.80 as well, which has been a historic pivot actually on this chart. 76.80. If I zoom out here, it's been reasonably used quite often actually. 76.80. So the fact that we've broken above that again is an interesting improvement on the chart. So what you'd look for is the Aussie to start to try and build support around this breakout level, and it sort of is thinking about doing it actually, just as the momentum indicators unwind. Interestingly also that the RSI on the hourly chart is actually at its highest for around 3 weeks, which is just before that big selling phase started again. So there are certainly signs of improvement on this chart, and you'd want the MACD lines to also now sort of position themselves consistently above neutral, and that would also give you indication that perhaps we're beginning to see a bit of an improvement. The initial resistance comes in now after if you start to see the support building. The next resistance higher is 77.40. Then it becomes comes in at 78 figure, which is again an old key support level, which is now resistance. So the overhead resistance levels are sort of mounting here. So you've got some considerable resistance overhead that needs to get above, and certainly I think that 77.40 to 77.60. Sorry, let me just zoom back in here. 77.40 to 77.70. Sorry, I think there's a bit of a pivot level sort of trading resistance band that you'd need to see the Aussie break through before you start getting more positive. But certainly at the moment the indicators are improving, and it needs to hold on to this breakout above that downtrend now. So support around the 76.80 level would be ideal. To try and see this build now once again. It is an interesting improvement that we've seen in the Aussie, and it certainly looks as though being bearish on the Aussie is probably not the way to be. Maybe turning more neutral near term, and if you see sort of further gains to the upside, I think you need to turn more positive, certainly on a break above that 77.70 level. So improvements on the Aussie, but nothing too substantial yet. Still some work to be done. So I wish you good luck in your trading on the Aussie today, and I will speak to you later. Thank you.